Welcome to Season 2 of FinTech's A podcast by the one and only policy shop for Canada's fintech scene. I'm Alex, and I'll be your host. Join me as I talk to the people who are making a big difference in the lives of Canadians. Today, our guest is Ryan Yates. We talk to him about what it's like to get a banking license, why there are thousands of payment companies in a banking sector that is dominated by a few big whales, and the companies Ryan has started, including a few fintechs and a brewery he now co-owns. Ryan, thank you so much for joining us today. It's a pleasure to have you here.
Yeah, it's great to be here, Alex, and looking forward to the chat.
My first question is, what's it like to get a banking license?
Oh, you got to go over there right away. A big, deep question like that. Honestly, it was pretty challenging. The Modus license took a couple of years, and it took a lot of business case planning, a lot of building a great team, it's definitely a lot of paperwork, and you got to be very, very prepared with a lot of patience. That's probably the best way to describe that process.
To everyone watching from the outside, there appears to be a consensus that it's hard to get a banking license, but I don't think anyone really knows exactly or tangibly how hard, because few people in the country have had to go through this process. Can you tell us a bit about what it's like for those who maybe know it's hard, but have never gone through it and don't know in a more concrete way why it's so difficult?
Yeah, I mean, I think where people may think that it's easier than it is it does not matter. And Alex, you know me well, so I'll just give my very blunt answers to things. It doesn't matter how deep your pockets are and how much money you have. OSFI does not care who you are. They want to make sure that you're prepared and that you're ready and you know how to run a financial institution that is not going to destabilize the Canadian economy or bring a bad reputation to the banking sector in Canada. So everything you do in that application is there to justify not only how you're going to be successful, but how you're going to manage it and manage the business. Circumvent a downfall in either your own business practices or that of the Canadian economy, how you're going to protect Canadian consumers and businesses, and how you're going to operate in a stable manner, satisfying all of the regulatory compliant things that you need to do as a member of a pretty niche group of companies here in Canada. So I think, to describe it as being a process that's difficult is an understatement. It is a very challenging process that will befall even the biggest, deepest pockets. I really think that those that go forward to apply for a banking license need to be kind of prepared for the patient journey that it's going to take them. I mean, this is many, many years. I really suggest most who want to undertake it plan for a time horizon of about 5 years from start to end, and that they be very patient and very specific around what they're trying to accomplish. I don't think OSFI or the regulators are out to get anybody. I think they're very open-minded on the types of business models that are out there, but I think you really got to be pretty clear on how you're going to deliver it, how it's going to be stable, how it's complying with regulations, and how it's going to add value for Canadians. And that's probably as deep as I could probably get on such a broad question.
So a lot of entrepreneurs start a company, it operates in a certain way. They want to become a bank. Does becoming a bank fundamentally change what you can be if you're starting out as a neobank or a fintech company, to use a broader term?
Yeah, I mean, when you make that banking application, you're really signing up for a specific business model, right? So, I mean, whether you're starting a neobank that's digital focused, that's going to offer Canadians like high interest savings or payment products, right? You got to stay focused on that journey, because that's the journey for which you got approval. when we made our application, it was very broad. So it covered things like consumer lending, commercial deposits, retail deposits, payments. So we were very lucky to ask for such a broad scope of our business model. But I think when you're making that application to OSFI, you really want to make sure that your business is clear and that you're specific in what you're asking for. So because there are, once that order to commence is received, you've got to stay true to those lanes that you're approved in. You can't really deviate from that without another sort of amendment to your application. So I think, I hope that answers that question.
It does. And it raises a follow-up. What's harder, becoming a bank or being a bank?
That's a pretty good question. I think it's harder to become a bank. So the reason I say that is, if you are a bank, you can hire pretty talented people with a great breadth of experience to manage the bank. There's a lot of people out there who could keep the lights on, I guess is the best way to say it. There's not a lot of people who can create something, and this goes for any business, bank, brewery even. There's not a lot of people who can create something from nothing. There's not a lot of people who can tackle a task that has no Sherpa to guide them through it. To create a bank requires entrepreneurship within the regulatory landscape. That's a pretty unique skill. And it's not easy hired for. But managing a bank, I believe, is a skill set that there's a lot of Canadians have a employment in that field, and you can draw from a pretty breadth of talented people.
Why did Meridian want to have a bank in the family? As a credit union, wouldn't it have been able to do much of what could already be done?
Yeah, so that's a great question. I've been asked that many times over the years. So I can't really speak to what the business model of the bank is these days. But back when we first started the application, credit unions were provincially regulated, and they still are today. And what that meant was the credit unions predominantly serve the communities under their provincial regulation. So Meridian, as an example, couldn't go out to, say, Vancouver and open up a branch and start to acquire members from the BC community. With that federal license, it opened up the borders. It allowed them to offer, especially in a digital age like now, the ability to have membership and bring their value of members, profits for a purpose beyond the borders of Ontario, and to bring what differentiated them as a financial institution into other new markets, to better serve, their existing membership by, expanding geographically, but more importantly, allowed them to bring their uniqueness to other Canadians. So that's what the federal license initially offered to Meridian.
Right. Are there any significant or meaningful differences about how banks are overseen federally versus how credit unions are overseen provincially?
Yeah, there's a lot of differences. A great one, probably the easiest example, is just the insurance guarantee, to be honest. So under CDIC, most banks, and don't quote me on this because I'm not an expert anymore, but most banks have up to $250,000 of insurance guarantee. But under the credit union system, they're insured by their provincial regulators in many cases. And that's pretty diverse and different province by province. So out in the West, you have BC and Alberta that have up to 100% deposit guarantee. Out here in Ontario, I believe it's aligned with CDIC these days. But yeah, so there are pretty significant differences as you go province to province.
When it comes to the way credit unions have to manage their range of risks, cybersecurity risk, third-party risk, op risk, are there any significant differences between how the provincial regulators do it versus the federal one, which is OSFI?
Yeah, I think there's quite a bit of differences, primarily related to scale, size, and complexity. So I'm not a cyber risk expert or even a a security expert, so I can't really speak to specific differences. I just, more broadly, when you're looking at the OSFI level, things are considering the scope and complexity of larger financial institutions that may have a global presence. So they would likely be concerned with things like global threats and business continuity at sort of a significant scale to many provinces, many communities, and perhaps even beyond the borders of Canada, and how things would be handled. I think when you're looking at the provincial regulators, that's more specific to smaller institutions, many hundreds of them in Canada, that might have significantly smaller scale and sort of serve some niche markets. So I think that's really the difference that I've seen, is more in the size and scale of expectations.
Right. One explanation I've heard for why we survived the financial crisis is that we had, and why in general we've survived many financial crises where south of the border banks have been a little less lucky, is that Canada has long had these big financial institutions that have very diversified portfolios of risk, which make them very resilient in a way. Given what you said about some of the differences between provincial regulators and federal ones, is it harder to supervise smaller and possibly less diversified institutions, or bigger and more diversified ones?
I don't know that it's harder. I think there's just differences, right? I think at the credit union level, we almost have to go back to why do credit unions exist in the first place versus the big banks, right? So credit unions existed, and they always have to serve unique or niche or communities of interest, right? So there's a lot of credit unions that are based on a culture. There's some that are based on specific, sectors, like the teachers pension group, as an example. I think the banks are more broad, right? If you took the labels and the branding off of the banks, in its totality, it'd be very hard to differentiate the services between, say, the big blue bank versus the big red bank, right? So I think the differences are that at the provincial level, there's got to be an understanding of the uniqueness associated with serving certain communities. Whereas I think at the OSFI level and the federal level, relative to the big five, big six banks, you're dealing in a bit more broad scope, right? You're dealing with providing a regulatory framework that has to serve the needs of the many, through it's almost through law of averages, right? The big banks serve everybody, so it's kind of has to serve a very broad breadth, whereas the credit unions can be more community focused, can kind of be some niche. There can have perhaps be even some unique policies specific to serving certain markets.
Right. When it comes to financial services policy, our sector often says things. I'm guilty of saying this. Canada is lagging behind the rest of the world. That's definitely true of certain initiatives, open banking, payments modernization, but it's not really true of some others. Take Canada's adoption of the Basel Accord. We're rushing ahead of the US, the UK, and Europe, even though Basel IV comes with some unintended consequences at a time when we might not be able to afford them. Some bank economists have said that continuing to go along the Basel route more quickly than our peers will make lending more costly, which will put a damper on Canada's productivity. So lagging in some ways, more enthusiasm to rush ahead in others. If you had to describe Canada's approach to financial services oversight overall, how would you describe it?
I waffle every day on this, and I have pretty great conversations with the rest of the team here. I'll go with my personal opinion of today, and I do believe the Canadian banking sector. I don't want to say we're lagging behind any other country, right? I think we could just do more. And what I mean by that is I don't want to compare us to other countries or what other economies are doing. I just think that the Canadian economy and the Canadian banking sector in particular could do more. There is no reason that a Canadian, a new Canadian or an existing Canadian shouldn't be able to go and get a basic banking account that allows them to pay their bills and get a loan for their life decisions, and have the general sense of financial freedom that a bank account would allow, right? I mean, the reality is, since COVID, people don't use cash as much anymore. I can't remember the last time I even held a $5 bill. Everything is tap to pay. Everything is digital. I mean, we really, there is no excuse for Canadians not having basic access to banking privileges. And I see that as a payment company, as an individual, and as an entrepreneur, almost in all of those veins, right? As an individual, I mean, we don't have real-time payments here in Canada, right? Like, why does it? So here's an interesting thing. Why could I travel today to Europe and beat my money there, right? So, there's just some basics, I think, that we need to step up and just improve. And I'm not talking about comparing us to other markets. I mean, just generally, it's 2024, everybody. Like, let's make things a lot faster. Let's make things more convenient. Let's make service a priority again. And like, honestly, let's get back to being that sort of global brand in banking. Canada used to be the place everybody looked up to. And now I would actually say, look to places like Australia, or even look at some of the emerging markets, even some of the things that are going on in Europe. I mean, things are improving for banking, for payments, for access all around us in the world. But it doesn't, again, personal opinion, it doesn't seem to be the case here in Canada. And I really could get into why. Like, I think that's a product of policy. It's a product of trying to do the right things, a product of all the regulatory things we have to satisfy, and all the amount of efforts that we got to put into those things. It is a very big boulder to lift, and I don't know that it can easily be solved. But I do think with things like the payment community, the fintech community, there are a lot of innovative companies now that are adapting to these regulations. And I hope that in the next 10 years, we'll see a lot more competition, a lot more innovation, especially as we sort of move to an environment where that's accepted.
Right. Great segue into the next topic I wanted to talk to you about, payment service providers. The Bank of Canada says there are thousands of them. Given how ubiquitous and dominant the big five banks are, right? The stat that gets thrown out is they control 90% of the bank accounts. It's hard to imagine that there is any room in the Canadian market for payment service providers, especially thousands of them. So my question, Ryan, is what do these thousands of payment service providers do in a market so concentrated like Canada's?
Yeah, great question. I guess the short answer is they actually make the money move. I mean, so you're right. The big banks have 98 probably percent. I mean, when I did some analysis on this years ago, they probably have 98% of all Canadians are banking there. But there is an entire subsector of the Canadian economy that uses payment companies. So they're not necessarily moving money from a big blue bank to a big red bank in a simple way like that. They perhaps are, making smaller purchases, making faster purchases, using their credit card. Like, there's a lot of, there is definitely thousands of companies that would meet the criteria as a payment service provider that are providing value to Canadians. Like, in a lot of cases, payroll is not done by the big banks. It's done by it's done by payment service providers. A lot of commissions are done through apps or payment service providers. So I think, there's loyalty programs, there's just an insane amount of different types of companies that are providing a value for goods. And I think if you distill, what our payment service providers do, and they're really just exchanging value of goods, then your definition of who's providing that service greatly expands.
Why haven't banks gotten into these markets and instead left room for thousands of payment service providers?
I don't really know, Alex. I mean, I think maybe it's primarily due to banks have traditionally focused on let's distill banking down to what it is, right? I mean, it's how do banks earn money? Okay, so money comes in, they then lend it out, they earn a margin or spread on it, and that is the most simplest way to explain what a bank does, right? I think one of the reasons that perhaps the banks haven't got into the work or the types of activities that payment service providers do is because it's pretty diverse, right? There's a lot of connections and a lot of different sort of payment rails and hops and jumps around movement of money globally and in Canada. And that equation gets significantly more complicated, right? It's no longer about just taking some deposits and then lending that same money out at a margin or spread. You're now talking about how do you earn money or fees on account activity? Do you earn money or fees on payment speed? Maybe you earn it on risk and compliance. It makes the equation go from a 1 + 1 = 2 to 1 times divided by, it just greatly increases the equation of how to make money. And I think it's not that the banks want to stay away from that. I think it's just a harder business case to prove. And often maybe the strategy is much more detailed and in depth than the traditional, what I would call interest earning income model.
Right. At a conference recently, Payments Canada's new CEO, before, of course, she was appointed as Payments Canada's new CEO, she was still with TD Bank at the time, was on a panel. And I wasn't watching the conversation. Someone told me this after the fact. So if I've butchered some details here, I apologize well in advance. But I heard that Payments Canada's new CEO made a comment about real-time payments in the US and said something to the effect of, oh, well, it's gambling. That's kind of behind all those volumes. Do we really want to be promoting that kind of activity here as if it's a bad thing? In any event, I have noticed that there are payments companies that specialize specifically in betting and gaming markets. Why is there that intersection?
So the great answer to that, I think, is this goes back to the risk profiles that the banks are willing to have on their portfolio, right? Most banks have they all have a risk policy and they all have procedures. They have certain sectors that they cater to. I mean, I think traditionally sectors like iGaming, sports bet, crypto, even international remittance of payments have been in a higher risk sector. And so instead of having policies that allow for that sector and articulate how to best manage it, they've sort of blacklisted it as a no-go. So instead of building the appropriate infrastructure to manage it and charge the fees needed, they have made it a no-go. And by making it a no-go, they've pushed it sort of underground. And so what's happened is, by pushing it underground, it's become harder. It's actually created a bit of a space for these payment service companies. It's created a space for a niche. And now we see it sort of happening. We saw it years ago with the cannabis industry, right? Prior to regulation, it was pushed underground. It was legal in certain markets, illegal in others, but the legal guys had a real hard go of it until regulation changed. And now that's a pretty, understood market. It can be banked. So I think to answer the question is, you see the banks create restrictive policies on what they won't do instead of seeing the banks figure out a way to provide a service and manage the risk appropriately and price things appropriately.
Right. What are the big risks banks are trying to manage or avoid when they just shut themselves off from certain customer segments?
Yeah, primarily fraud and money laundering and terrorist financing. I mean, it's been ingrained into most of us that are bankers for over 20 years, right? So those are the primary core risks that they're seeking to avoid. And I think we have, we almost have this abstinence type mentality here in Canada versus acceptance that the behavior is going to happen and management of it. So I think what they're doing is they're drafting the policies to to restrict their risk and ensure that they're meeting the regulatory obligations rather than invest in the risk, figure out how to manage it, how to mitigate it, and how to comply with it and still provide a service. But again, those are kind of my personal opinions on it. So
yeah. And I mean, some might argue that though banks are trying to, they're failing at managing this risk at all. I mean, there was a big Canadian bank on the front page of the New York Times not too long ago for being, involved in facilitating financial crime of epic proportions. So even they struggle despite all that. Given this risk profile of banks, given that Canada's regulatory system is the way that it is, what are the biggest challenges right now for payment service providers to scale and grow their business?
Yeah, I mean, I love that question because I think about it often, right? I mean, in 2019, when we created Apaylo, I created it in my basement with a dining room table and a poker table, right? And I'm not joking. That's how the company started. You can't do that anymore. Right now, there's a pretty significant burden of FinTrack regulations that came into effect in August of 2022. That applies to thousands of companies in Canada, whether they move when they're in the business of moving money. I mean, so even with that first step of regulatory burden, I mean, you've now got to have a compliance officer and a team and transaction monitoring and, detailed records and KYC on all the businesses that you are dealing with or the individuals. So I think that regulatory burden became the first of many hurdles to get into this business. I think, now the challenging thing is we go into November of 2024, we've got the RPAA coming out with the Bank of Canada, which will now establish another sort of hurdle to get into this business. So, another set of rules, another set of complex, regulation that oversights this, this community of companies. And then even in addition to that, we have other players like CDIC, has opened up their doors to the payment service providers as well, which will be a fast follow to RPAA. So I think the biggest hurdle to get into this game now is just your knowledge of the regulations, how to operate in a highly regulated market, still make a profit, satisfy your shareholders, your stakeholders, and really not just not jeopardize the Canadian economy's integrity. So, but it was a bit the Wild West prior to 2022. And I'm really happy to say, like, for us, we're kind of on the other side of that. I mean, we wouldn't be able to start now. We were self-funded from day zero. But now we've built a significant compliance team and take it very serious. And I think the biggest thing that payment service providers have to do as we go into 2024, 25, is really build out that compliance regime, right? Strengthen it and, make sure that they operate within the confines of the regulation here in Canada.
Despite the regulation that's already come, the regulation that's on the horizon, I still hear stories about PSPs getting debanked or de-risked. What is de-risking, and do you have an opinion on whether the government's reason for doing really nothing about it is bullshit?
I don't think they're doing nothing about it. I think that is bullshit, right? Like, I think the government is got more concerns than, say, a specific business model, right? So the government is trying their best to implement a policy that applies to everybody. But what has happened is that PSPs in particular are very niche, right? They've served, in many cases, high interest or high margin niche components of our Canadian economy. And so what's happened is the government is deploying something that is tries to meet the law of averages. It tries to provide the infrastructure needed for everybody, but it doesn't consider the very unique cases that might be out there on a one-by-one basis. And so, I mean, I think it will in the end, unfortunately, is that we will get, if we fast forward 3 years from now, we'll probably have far fewer amounts of PSPs, and they'll probably all provide very similar services, right? But that's just sort of a factor of the ones that will survive will be the ones that can conform to what the government was looking for and can continue to operate in this new world. So I don't think it's bullshit. I think the government is really trying. I mean, I had some great calls with you, Alex, and with Ron and the team at Bank of Canada. And I really understood that they were trying their best, and they continue to do so. I really think this is a hard equation, and with some significantly smarter people than myself on the team, and they're just doing their best to try and make it work. And I think those PSBs that understand that and have some patience and willingness to work with them, we're going to get to the other side, and everything will, hopefully be better, right? Hopefully we'll see some improvements.
What can federal policymakers do over the next, say, 1 to 3 years to make it easier for money services businesses and payment service providers to access banking?
Yeah, I mean, I could give you a great direct answer to that question. Yeah, easy. Forced to make them change their policies that they, just like individual Canadians, every business should be allowed to have a bank account with basic privileges. Force that into a policy that there is a no scenario, right? Like, so you can certainly restrict access to products and services, but just like an individual, I believe somewhere deep in our regulations in Canada, everybody is allowed to have a bank account. Now, the banks can certainly impose restrictions on the use of that account based on the scenario, right? But I believe they are not allowed to deny an individual. So at least that's my belief. So I think what they could do is impose something similar to that, is that banks need to have a no policy for a Canadian business of reputation that allows for basic banking privileges. There, stop. I think we would then see at least some business entrepreneurship happen in Canada. We would see a lot more innovation start to occur. And I think on the PSP side of things too, I think there's an opportunity to be a bit more patient, right? Like, look, this is kind of new for everybody, right? Like, it's new for FinTrack, it's new for the Bank of Canada, it's new for CDIC, it's new for the banks. Let's all recognize that everybody is moving forward, but the pace is going to be a little bit slower than maybe expected. And that's kind of contravened with the whole premise of the paytech and fintech space that often does include some crypto companies. Like, they're fast moving companies, right? So you have big, slow policy, trying to serve a fast moving demographic. And so I think everybody needs to kind of meet in the middle.
Right. You strike me as something of a serial entrepreneur. You started a bunch of financial technology companies. You mentioned Apaylo, just one of them. I want to ask you about that. You co-own a brewery, if I understand correctly. Tell me about Apaylo.
Sure. Apaylo was founded in 2019. I owned an identity verification company in partnership with a really good friend of mine before Apaylo, and we used to see a lot of that company was really founded in working with the credit unions in the banking sector. And we saw a lot of people changing their bank accounts, and the movement of money was an important attribute. And so really just started Apaylo because we saw the need that people and Canadians wanted to move money. I mean, that idea really, I go back and look at some of my time I spent with, Arkady Coleman and the founder of ING, and he had this vision, he probably still does, to see money move at the speed of people movement. And so that kind of stuck with me. So building Apaylo was really just built to satisfy that need. Like, how can we provide faster payments? How can we make money move? And so that was the early days of starting the company, was just building out the ability to make some money move. And so we started from there, and then we started to look at the sectors that we could serve. And fast forward now to 2024, 25, we're kind of on track to process about $20 billion in payments this year. All from the humble origins of my basement dining room chair that broke and the poker table, I guess.
Do you still have the poker table?
I do, yeah. It's nothing fancy either. It's got like, my kids use it to draw and stuff like that. But yeah, it's kind of humble beginnings, and really just take it day by day and see if we can build and grow and provide unique products or services, and really just try to provide strong customer service. And we just do that every day.
You said earlier that you don't think someone could start a payment company like that, given everything that the government is doing in the space, supervising and regulating the sector a little more strictly and broadly. On net, in the long run, is that a good thing or a bad thing?
For us, on the other side of it, a good thing, right? I mean, I think we're going to see that I think they quoted 2,800 payment companies in Canada, might have been 23. I think we're going to see far fewer of them, and I believe we'll be on the other side of it. So for us, I think it's great because we'll be part of a fewer set of companies that provides, satisfies that payment processing need in Canada. It's not that it can't be created, Alex. I don't want to leave that impression. I mean, anybody, as an entrepreneur, I think anybody who has a dream should follow it and just do it relentlessly every day without giving up, right? But I think it's harder, right? I think you got to have a better plan now, and you got to have more capital now. Like when we did it, we didn't have a plan per se, as strong as it should have been. We didn't have the capital as strong as it needed to be. So I think you can do it today, and I just think you need deeper pockets and a better plan and stronger people from day zero. That's all.
Tell me about FinTracking.
Yeah, so similar to Apaylo, recently saw a need to provide better services in the regulatory compliance space. So me and one of my business partners created another company which seeks to provide onboarding services and KYC, KYB services, consulting on a risk and compliance perspective for those thousands of PSBs or any type of business that might have a regulatory burden. That was another great success. I mean, started that company about a year and a little bit ago, and it's already doing really well, especially in this regime where there's a lot of people seeking guidance on how to comply or improve their overall compliance.
By making it easier for fintechs to start companies, are we making it harder for fintechs to start companies?
By making it easier, are we making it harder?
You're making it easier for more entrants to enter the space, which increases the competitive pressure, which then just makes it harder for everyone. It shrinks everyone's profits.
I don't know that that's true, man. I mean, some of the best people I know are on paper competitors, right? I think that it creates, and I enjoy. So again, speaking for myself, I enjoy talking to people. I enjoy listening to how others are, taking something and making it their own or inventing a new process that they never had before. I think that there's kind of it's nice to be part of a community, right? So instead of looking at it as the competitive lens that we all eat a little bit less and we all have to fight. I mean, I don't know if this isn't on the internet, but I ride my motorcycles a lot. And one of the things I love about it is the community, right? Nobody's judging any other bike rider on what bike they're riding or the style of their bike. I mean, it's something unique, but we're all part of a community. I kind of see that the same in the payment space, is that we're all pretty unique. We're not necessarily competing. We might be competing for the same dollars, but it's more about what we can do and the ideas that we can foster than it is about the competition for the next dollar. And that's my opinion. I mean, I think the sea of payments is huge, and it's bigger than any one little company. So I think I enjoy the community aspect of what we have, we have here in Canada, to be honest.
And tell me about the brewery you co-own.
Yeah, I use the words passion project, which is a great way of describing something that doesn't make any money. But yeah, I mean, I own a brewery with a bunch of friends. It's kind of a cool little project. It's just really for fun. it's just sort of getting up and running. It's been a great learning experience for me. I mean, that's a whole new new group of regulations in the AGCO community. It's a sector I know nothing about. So for me, it was like out of interest, out of just being involved in something completely different to banking. I spent my whole career in banking, and was approached by some friends to be part of it. And all of the friends are entrepreneurs in their own way with successful businesses. And so it was just an opportunity again to have some fun with friends.
What's the secret to making it work as a brewery? Like, what's the path to success there? What has to go right?
I don't know what's right for the brewery yet, Alex. I can only speak to like just entrepreneurship in general. The path to success is you got to have kind of the grit to get through every day, right? Every day. I mean, I talk a lot about this to a lot of people. It's like every day somebody's trying to tear it down. It can be anything. It can be from a bill that you received that was overpriced. It can be somebody, who you got to spend more money on something. It can be stakeholders, shareholders, clients, the regulators. There's always a battle to fight. And honestly, as an entrepreneur in any industry, it's just have the grit to like suck it up and get on with it, and not take it too serious, and keep chugging away. Chug away longer than your competition. That's about it.
I feel like in that answer, and perhaps even in some of the ventures you've recently taken on, there seems to be something of an underdog in your entrepreneurial spirit. You're starting companies in the financial services sector where everyone is taking on a Goliath, right? Like the big five are huge. Even in the payment space, there are some massive companies that at some margins you're competing with. Brewing feels the same, right? Like you're taking on these big players that have had their position in the market for so long and have regulatory barriers to entry to protect them from upstarts like you. Why do you subject yourself to such torture?
I don't know, Alex. I don't know. I mean, I everybody here in the office knows, like I say it often. I'm like, I want to go work at a coffee place, there's a big Canadian chain. I'd love to just be there for a day or two, let my mind slow down, right? Like, I just can't do it. I think it's in my nature to like punish myself or something, or be part of something that I am an underdog, and I can't shake it. And everybody who knows me in my entire life, I've always done that. I've always been an underdog. I always want to be on that other side of that fight. I'm the worst possible person to compete with. Like I will outwork you. And like that is, I will not outthink you. Like I can't do it. I'm not the smartest person, but I sure as shit will hustle harder than you, and I will do it every day forever. And so I think that's the key to success in any business. And I tell people often, do not start a business. It's the fucking hardest thing you're ever going to do. Like, it's going to be harder than your marriage. It will be harder than raising kids, right? It is going to destroy you every day, or try to. So get into it with that understanding that you are a relentless Viking that's going to cross the Atlantic, and you are going to crush it, and nothing is going to stop you. And if you can hold that atmosphere and rigor every single day, you will be unstoppable. And so I think that's the key to entrepreneurship or business in my mind, is just find your internal motivation to be unstoppable every single fucking day, because you have to.
Well, Ryan, you look good. You don't look destroyed at all. Keep up the good work. Thank you for joining us on this podcast. I really enjoyed the conversation. I hope you did as well.
I did, Alex. Thank you very much for letting me participate.
Awesome. And that's a wrap for this episode. Thanks for joining us. If you're looking for more, visit us at fintechscanada.ca or follow us on LinkedIn. See you next time.